because this stock is blocked on Webull. It's unfortunate. I would have probably got filled around 309 there, and it dipped down quite a bit from that level actually. So it honestly wouldn't have been. Maybe I would have stopped out. Who knows? But it did end up rallying back up here, and I just tested again, tried to take an order just to see if it was really blocked, but yep, wasn't able to trade it. Super unfortunate. It did end up pulling away, and I think this was the most obvious stock of the day, and there was a lot of opportunity here. There's another dip right there. Probably would have taken that, and that worked really nicely as well. So that was an unfortunate way to start the day. I'm not sure why it's blocked on Webull. I think this is cleaner price action than some of the other stocks that are actually available on Webull. But anyways, starting the day off with a little bit of FOMO. Not a great start. So moving on to ARTL, this stock is the first one that I traded. This is a US company with a float of 630,000 shares. It's a healthcare company, and we've seen this one pop up before, so I was familiar with it, and I felt like pretty confident taking a stab at it. However, this is where you guys will see execution is how important execution is. So I originally meant to take a dip here on this candle, but since I had slow fingers, I top ticked this candle. And next thing I know, it's completely rejecting it against my entry. And I'm just starstruck. And the right thing to do would have been sell it at VWAP, or as it broke below, but I held it. And this is the next part. You guys are going to see another execution error, selling on the ask. And now it's dropping lower from that place. The right thing to do in this moment is to just bail out on the bid. You make a mistake, you sell on the bid, you get filled right here at 523, and that's it. You call it a small loss. So the execution was off. The idea was all right. Obviously, it didn't play out in my favor in any case. However, bailing out would have served me much better than trying to get filled on the ask. So 2 execution errors there on the entry and on the exit. So slow to press the buy button and too slow to sell. And trying to sell on the ask was just a terrible, not a terrible mistake. It was a terrible mistake actually. Not the right thing to do. So the next trade I took here was a little dip. So we popped up here and we dipped down. I'm kind of seeing green go through the tape here, through the corner of my eye. I guess you can argue this was a little bit of a revenge trade. However, we did have VWAP as support. It seemed like we were holding up there. And while it was sort of a revenge trade, I don't think it was a bad trade. I think the idea was all right. So I don't believe that last trade got me super emotional in any sort of way. However, it was a risky trade. It was a risky trade. I'll say that. This next trade, I believe, was a dip and rip. This one I'm more okay with because the dip actually was nice. I got a pretty discounted entry, I'd say, and was able to get some profit out here. So this time I sold on the ask, and that actually worked in my favor. Now, yes, it worked in my favor this time, but it didn't serve for much because that first time I tried to sell on the ask, I may have lost more if I may have lost less if I just sold on the bid. So trying to see whether, do I just sell on the bid all the time and save myself from the losses, or do I sell on the ask sometime and get a little more profit? So I think the right thing to do is just bail out. As soon as the stock stops moving or you want to get out, just hit the bid. That's the best thing to do. See, now had I tried to sell on the ask a little bit too late, I would have gotten caught in this and it would have gone red on me. So obviously selling on the ask is nice to get filled higher, but also is riskier because somebody has to buy that up. If nobody wants to push the price higher, then you're you're not going to get filled. Okay, so here I take another trade on ARTL. It's another dip or micro pullback. After this candle closes, I'm okay with this setup. I like this one sort of. It didn't work as well as I expected it to. I thought I was just going to pull away immediately, which would have been ideal. However, I do think it ends up rallying higher the next candle. And the thing is, we've been seeing this pattern here on ARTL. So we have a candle up, doji, candle up, doji, then a rejection here, candle up, doji, another doji, candle up, doji. So trying to trade a stock in a way that you trade every other stock is not doesn't always work. So certain stocks will just have like patterns like this where you just have to kind of adapt in real time. Otherwise, you try to hop in on every dip, you're gonna get stopped out, or you try to get in for the stock to pull away and it just doesn't do that. So uh, I think the best thing you can do in terms of adapting is pay attention to how this particular stock trades, whatever stock you're looking at. Is there a lot of dojis? Is there a lot of topping tails? If there's a lot of topping tails, you don't want to get in as it's pulling away. You don't want to get in the middle of a green candle. You probably want to get in on a dip or something like that. But anyways, ARTL ends up pulling away here, and then we get another dip, and I jump in right there for a small winner actually. Bottom ticked the candle, which was nice, but it ends up struggling here, and I'm not liking that at all. So I sell that for a small loser there. However, it does come back up, actually, a decent amount above my entry. So hit a high of 13 there. I got out at 81. So a little unfortunate, but not the end of the world. I think selling right there was the right decision. On the ask, probably not the right decision. I'm trying to wait for it, but I got filled, so that's okay. But had that order not gotten filled and it just kept dropping, then that would have been obviously a much bigger loss. So another instance of where execution could make or break your trading day or trading in general. So thankfully I got filled there. I'm grateful for that, but I think the right thing to do when you need to get out is just sell. This was a little bit different because I'm trying to get out break even. When it's pulling away and then it stops, or you get it stalls out, then you just hit the bid. That's the best thing to do. So this next trade, I was looking for a dip and rip here, but it really went so quickly. It kind of just teleported almost. But this did end up being a winner. And once again, look, we're already rejecting, and I'm like, okay, well, I don't know about this trade. So once we go green for a second, I get out, and I'm like, all right, that's fine. I'd rather have that than have it be a loser. It also ends up coming right up to this daily level here, which technically I could have held for the move up to that level, but I think the right thing to do was sell it since it was already struggling. So now this next trade is on JTAI. Now this one held a little more risk since we have this huge topping tail here. I mean, this is from 1298, almost 13, down to 1076. That's a 2-point drop. So it's risky. And it actually, I think, drops. If it drops down to 10, I mean, that would be crazy. So I try to get out there on the ask. And my timing was right for, okay, actually, this one ended up being a winner. But see how that backfired on me? If I had just sold on the bid, I was unrealized. Let's see. When I pressed my order to sell, I was unrealized $6 in the green. If I just sold on the bid, I probably would have gotten filled. Okay, well, orders are going through at 94. So, and then still 81. If I got filled at 81, that would have been better even. I got filled at 78, which was obviously a little lower. Or sorry, 85. Okay. Not bad, but still, you get the idea. See, if this kept dumping like way quicker, then obviously, once again, it would have been a much bigger loss. So we rally back up here on JTAI. So it was rejecting, and then this candle ended up being green. And I was thinking, okay, dip and rip for first candle to make a new high. And I usually like that entry. I would say this is not a bad entry. I thought this was gonna work for sure, and it looked like it was right here. Tried to sell there, so the timing was right once again. The timing was right. When did I press that? Let's see. Okay, price is at 36. I'm unrealized $3 open P&L. That's fine. If that was a $3 winner, that would have been much better than what actually happened. However, that's not what happened. I try to move my order down, and then it starts flushing. So it obviously rejected going green, and I try to sell again. Once again, selling on the ask. That's an execution error right there. And so this ends up dumping. I try to sell once. Now I'm trying to get back to break even because there's a part of me in my head that's like, well, I deserve to be getting filled at break even or better because that's what my original idea was, but my execution was off, and so I suffer the consequences. End up taking a big loss. That's $1.28 a share loss. So stupid, stupid loss. I literally bottom ticked that. Bottom ticked that. Absolutely insane. The low was 10. I got filled at 10. So looking at it, it looks like 10 was the absolute low, which is okay. Actually, no. It went down to 977 on this candle, but I bottom ticked the candle before, and I end up getting back in here for the break back above VWAP and hold, I believe. This is it's hard to say. I think this is a little bit of a revenge trade. I think I looked at my P&L and I'm like, I gotta make that back. It's just not a setup I take a lot of the time. I think the most common setups I take are micro pullbacks, and I'm usually not good about waiting for them, except obviously in this case after that huge loss. So that was not good. I don't think this was great trading after that loss, but you know, it ends up working in my favor. Thank God, because this was super risky after a huge loss like that, so once again, trying to get filled on the ask, and thankfully I do, but had that started to reject, I would have just given back all that profit I just made back. So risky stuff. Risky stuff. The overarching theme right now is sell on the bid if you want to get out, because you're going to get out immediately and you have no risk of, or less risk of, getting caught in a flush. Obviously, I have my bail button set to sell at the bid minus 10 cents, so I have a little bit of wiggle room there. And I end up getting one more trade here. This one had my heart racing because I was like, if I just give back everything I just made, I will be fuming. Thankfully, that's not what happened. I ended up making like $3. What? Yeah, something like that. So after this, I was breathing a little bit easier, only down $3 on the day. I can live with that. So the important thing to take note of on this stock was that if I had just sold on the bid originally, I would not have had to make back for $30. I wouldn't have gone in the red. If I had just taken this trade right here, I could have sold on the bid, been green, and then taken this trade right here, which I made what? From 48 to 13, I made $35. So would have been in the profit for around $40 on this stock. It would have been this now would have been up $50 on the day. Would have been a great green day. More than $1 a share in profit. So this is just a lesson to be learned, because I think as the market has been heating up, I've been more aggressive about selling on the ask and trying to make the most profit out of every single trade, which is good, of course, because I feel like before I was really quick to cut my losers or cut my winners, and so I was leaving a lot of money on the table. So I think it's good that I'm trying to maximize my profit, but I don't think this is the exactly the right way to do it. Holding longer and trying to get filled on the ask is two different things. So usually when I'm selling, there's a reason. It's either stalling out or it's just not working. So being quick to sell on the bid is gonna benefit me more in the long run, I believe. Obviously, today is a perfect example. We had that what $50 loss just because I held and tried to sell on the ask. So I think in the long run, it will help me to do that. And if I want to hold, I'll hold. But when I'm ready to sell, I need to hit the bid. I think the issue also may stem from the fact that I've made it sort of muscle memory to just sell on the ask because obviously that's the best case scenario. And while that is true, it's better to be safe than sorry. So getting out on the bid is probably the best option if a stock is either stalling out or not working. Anyways, moving on to our next trade on ARTL, I took a dip and rip under or right under 7 and right above this double top pivot here. And this was a good trade. So you guys will see dips down for a second after this candle closes. And it doesn't really play out super well. And so I'm thinking, okay, getting ready to sell it. And I do actually get filled. They're selling on the ask. Got filled at 710 and bought in at 691. So that was a 20 cent a share trade. Not bad. So this next trade is going to be on WLDS. This also displays another instance of where execution hurts my overall potential profit. So this is an Israeli company. The stock has a float of 2 million shares. It did have news about wearable devices announces a warrant inducement transaction for $5 million. Sounds good, to be honest. So I'm looking for a dip and rip here. We don't get that exactly, and my entry is late. So obviously execution's a little bit off there. I enter in high. The risk was that this rejected completely and I would have been red on it. Thankfully, it didn't. Although it did reject for a second, it ends up pulling away. And this is also another instance of execution error. Tried to get filled on the ask, and then it goes all the way down to break even. So if we look at my unrealized, when I tried to sell right there, I was unrealized $11.60. I most likely would have gotten that or maybe 60 cents less. So $11 profit I would have made. But it ends up coming back all the way down and I make 78 cents on that. Now, obviously that's better than a loser, but just the fact that I could have made $11 on that is just like now doing the math, if this would have been a $30 winner without that loss, then we would be up 30, 47, almost 50 plus 11. That's like 60. I'd be up $60, almost 70 on the day. So, or no, just around $60. So gave up $10 there by not selling on the bid. Unfortunate. So yet again, I make another execution error. I'm trying to check how much buying power I have left. I see this dip, and I'll show my face so you guys can see. I'm looking for my buy button. My finger was not on the buy hotkey. So I'm looking down for a second. You guys can see that, right here. Trying to have my hand over the buy button, and then it goes without me. You can see my face. I was very upset that I missed that. I'll turn on the audio so you guys can also hear. But oh my gosh, I was about to take that. Oh my gosh, I was about to take that. I was about to take that. Oh terrible, my gosh, I was terrible. About to take that, bro. So if you guys couldn't tell, I was about to take that trade. It's unfortunate I missed out on about 50 cents of profit just on that move right there alone. And so this is another execution error that cost me what? So 50 cents on 40 shares would have been $20. So now this would have been I would have been up $80. So essentially, it's a $6 green day. Or 7. This sorry, I would have been up 70. Sorry. Wait, no. That would have been 80 actually if I had around 60 with perfect execution, not perfect, but just good enough. If I would have been up 60, this would have brought me to $80 in profit. So I mean, a lot of money is left on the table just from poor execution today. Really unfortunate, but I think it's a lesson that's very important to learn, and I'm glad I'm learning it today. And it's a green day, at least it's not a red day. It could be much worse, and maybe if it was a red day, I wouldn't even like be thinking about this. Who knows? Maybe I'd be too emotional to even recognize that my execution was so off. I don't know. But in any case, execution can make or break your trading, and you guys can see it in this video. If you guys want to watch the live stream, I have it in my live stream category on my channel. You guys can check out the whole thing, but I'm going over all my trades from today anyways in this video here for you guys. So here, this next trade I take is on SDST. This was really sort of risky, especially considering I'm only green by, what, $4 at this point. So we'll take a look here. This stock has a float of 6.42 million shares. It's a U.S. company. Industrials is the sector, and it secured an institutional investment framework supporting up to $150 million investment. So sounds pretty good. I thought I would take a dip here, and that's what I did, I believe. So this candle sort of closing with a topping tail there. But then I see, okay, wait, the candle did close properly? Question mark. Really strange. I don't know what is wrong with Webull. And then I try to fill my order, and I'm like, wait, what the heck? Why is my order up there? And then I'm like, well, if it's not gonna fill, then like I'll just cancel it. So I cancel it, and then it finally fills as soon as I cancel the order. Like what? This I can still blame myself technically. But if my order had gotten filled and I saw it struggling there, I would have sold it for sure. So I don't know what's up with that on Weebull's end, but very, very strange. And that's super frustrating that it made a mistake like that, because obviously if I'm using bigger size, that could cost me a lot of money, So I was unrealized in the red on that one, but ends up coming back up to my entry, and thankfully I got out for break even, small winner, 2 cents a share. Thank God. But that was it for today's trading. It was about a $6 green day, or $5.60. So a small green day, but a really great lesson to be learned from today, because today could have been a really big green day. Could have been up $80. If looking back on it and just counting up all the times where I tried to sell on the ask, but if I just sold on the bid, I would have made profit or had like maybe a small loser. And if I did that every single time, if I had just switched out every single time I sold on the ask today for selling on the bid, this would have been a really big green day. I would have been up just shy of $80, maybe a little bit less, but just shy of $80. That's $2 a share on 40 shares, which was all I took today. I only took 40 shares on every trade. So what was a $6 green day could have been $80 if my execution was just better. So a tough lesson to learn. I would rather be $80 in the green than 6, but obviously having a green day is better than having a red day. So that's all I have for you guys today. I hope you found this helpful. If you guys did, please hit that subscribe button and that like button. And with that, I will see you all in the next